Evening, Ira Epstein, and here we are on Tuesday, the 18th of March, 2025, about 6:20 p.m. Central Time. Well, as you can see, you're backing off a little bit in the metals tonight, but let's give it credit. The gold market up rather sharply into the 30-40 area, silver market into $34.50 an ounce, the copper market back over the $5 a pound area, platinum market got up today into the 1020s. These are powerful numbers as the markets woke up to hear that Israel had hit hard Gaza. 400 people reportedly dead. That set off, believe it or not, the energies. They took off in a big way because you have to fear that if the Houthis get involved to defend Hamas, what would that do? Are they going to strike at Saudi Arabia, Qatar, other areas to create mischief? Nobody knew. But as the morning went on, the energy started giving up. But the gold actually held on very well. And the stock market, well, it was a down day all the way through. There were hopes that you would see possibly something out in the video, very powerful in a statement. I watched the whole, if you will, the GTC conference where Jensen Huang was talking, and it was all technical. It was not for investors, not in my opinion. And the stock down $4 at the end of that proved what I'm saying. Now, if we take a look, we have some data tomorrow. You've got the Banks of Japan. They're going to release their monetary policy decision. And this is Japanese Standard Time, 11:45 to 3. They don't give you an exact time like we do. They give you a spread of time. At 1 in the afternoon, we're going to get the Federal Reserve monetary policy. We did get at the end of the day the oil stocks out of the API. Tomorrow morning, you'll get the EIA at 9:30 coming up. 459 billion barrels increase. That's bigger than the 4.2 that was in the prior week. The gasoline stocks were down 1.71, not as much as the draw last week, but you did draw a bit more out of the heating oil and the jet fuel, the distillates. So when we come back and we look at the market, what's the general feel of the market? Well, you know that presidents, plural, Putin and Trump talked today. I'll cover that in the financial market update with what my take on that was. We can see that we've got a mixed bag in many of the different currencies that are going on through here. I thought today that the Mexican peso looked interesting from the long side. We'll see if that follows through or not. But let's go to the charts and get a feel for what is going on. When we come to the gold market, this is, if the market were to finish here, an all-time high close. You can see how the market just keeps running up. The market took off to the upside. Why? Number one, we're not making anything but getting day by day closer to April 1st, when President Trump will have an idea from Secretary of Commerce Lutnick. What are the tariffs that are being proposed, the reciprocal tariffs, and what's going to happen come April 2nd or thereafter? It doesn't have to be on April 2nd. The president may want to study it. We will see what goes on. In the meantime, you can count that there's a lot of talk going on for other countries either retaliating or finding a way to appease this to avoid those tariffs. That'll be the interesting part. On the swing line, we now have a pattern of higher lows, higher highs. That has been set up, so we have an uptrend at work. You can see the markets in what I call a vertical rise. You made a bottom here and you just took off just like on steroids to the upside. The market has been running current tense. I call this the gorilla glue trade. It's when a market hits the upper Bollinger Band and it runs at it. And what the market does is as it's running at it, it tries to pull the slow stochastic and get it to embed. The first thing the slow stochastic typically does when this happens is it becomes overbought. The second step is, can it lock in like this? And if it does, it propels the market even further. Just think about where you're at. While you're down $1 right now, the high that we've made is what? 30.47, roughly. All right. And everybody under that price has got a loss. So the market finished right near the highs on top of everything. When you look at the silver market, you're getting a little bit of a bend, but prices are underneath the 18-day average of closes. And what that does is it keeps the market into a bias. The bias that the silver is stronger than the gold until you close back over that number. That doesn't mean that you can't see silver lose a little bit to gold. And as you climb back up, that's exactly what is happening. But the overall pattern is silver stronger. And you can see how the silver keeps hitting the Bollinger Band, but it's not the same. Do you notice that it's not running this band? It hits it, it completely gets away from it, then it hit it again. That's not the same as leaning on the band like that gorilla glue trade in the gold, which keeps the market going. And frankly, other than brief corrections, until you know more about the tariffs, you've got people scared, the stock market's going down, gold's like a sieve. It's just bringing in the money from everywhere that it can. In the copper market, this is all about China. And I'm telling you, I keep reading and reading and reading. I'm looking for the detail, and maybe that's what's wrong. I'm looking for detail, whereas China is saying they're going to pay people more money. They're going to make sure that there's more better schooling, that they're going to have a babysitting or caretaking in some way, whatever they want to call that. And it's going to drive the consumer to spend more money. And if that's the case, away you go. Number two, tariffs. You've got two markets. You've got the U.S. market and you've got the LME exchange. They're very different in where the pricings are. In America, we could see the price come up, but you don't have to see that happening on the LME exchange. That can stay much lower because the tariffs there, they're just going to keep putting in the copper and trading it with each other. Copper is one of those metals that is used in so many different products worldwide. It's going to be eventually a deficit product. I haven't heard any more in the U.S. saying in copper, why are we minting pennies that cost us 4 cents and we get $1 in value? It doesn't make sense. At some point, you got to say enough's enough. When we take a look at what this is doing, you've got a lower low and a higher high. By the way, who said a penny has to be made out of copper? Maybe there's something cheaper if you want to keep pennies around. As far as I'm concerned, round it to zero or a nickel, whatever it might be. I'd like to know the impact of that if you round it up to a nickel. That could be inflationary. Higher lows, higher highs, you hit the Bollinger Band. And again, this market is very close to setting up like gold, that gorilla glue trade. You need to hit it at least 3 times, and on the 4th time, I call it that gorilla glue. You've done your hits here now. You're right on the cusp of that. If you embed, then you start another run. But there's a change here. Gold likes to embed. Let me turn around here. You rarely embed to the bull side in the platinum market, where both numbers get and lock in over 80. So I don't trust this market on that upside as much as I do the gold to do more with it. In the dollar, it just keeps failing on rallies. And again, this goes with that bearish embedded reading. I keep teaching you this. When these things lock in, the rallies get sold by the pros until they're lost. Now, they don't, you can lose it for one day and get it back as an embedded part of it. That does happen. It happened to me today in one of the trades I was putting on. It's okay. The percentage of them working versus losing it the very next day are like 3 to 1, 4 to 1. It's high. So that's why I like those type of trades. And they generally, if they're fighting there, they don't get away from your real big numbers. Higher high, lower low, away you go with that. So you put this together, you get a game plan, and you try to execute on it. And one of the ways that you can execute with me is joining us on our research, because we're writing about this all day long. We're talking about what this would mean if the dollar keeps going down. What does that do for U.S. trade? Differences between how we look at, just example, hogs. We export 30% of our hogs, but we keep our beef at home. So you've got to consider, what does this mean? How's it going to impact all these different parts? Because it affects U.S. inflation. To me, you keep those hogs at home, pork prices, they won't be going up. Now we're talking eggs again. Eggs are becoming more plentiful. We're watching the wholesale prices come down. You heard me, down, and they're coming down nicely. But it takes 2 to 3 weeks before they get into the retail chain for that. So you've got to pay attention. We talk about this and so much more. Just go to our website, iraepstein.com. When you get there, look at free offers, sign up for any of the research that you want to give it a try. take a look at what we write. I think you'll be very impressed. I'm Ira. You have yourself a great day. I'll catch up with you all in the morning.